My trading system is now 99.99% complete. I'm not going to say 100% because every time I do, it turns out that I have to make a few changes and it's actually not 100% complete. So my Forex trading system is really close to completion. I've completed all of the logic and I'm now working on the user interface. And this is just kind of like a demo user interface. So I'm planning to actually implement this on an official website, but I actually just want to test this out at first in this demo user interface. So what is my Forex trading system? Well, it is inspired by mostly big banks, so banks like JP Morgan, Goldman Sachs, and UBS and so forth. I've read thousands of bank research on how they trade, and I essentially look at the factors that they look at whenever they are trading. So when I read their bank research, I say, what is JP Morgan looking at to make their trading decision? What is Goldman Sachs looking at to make their trading decisions? And I've come to the realization that big banks, they pay attention to seasonality. They look at the technical momentum on the charts. They look at positioning and sentiment. So what is the rest of the markets doing? They look at spread. So this is the bond market, and they look at the macroeconomic data. So these are all the factors that big banks and hedge funds use whenever they are making trading decisions. And I've essentially built a model to look at all of these factors and then aggregate them to give a final score. I should probably zoom in on this page right here because it's probably difficult to see. As I was saying, I built the model looking at all of these factors that I know drive currencies from my experience and also from reading bank research, and aggregate them. And that's essentially what the system does. And these numbers right here, they are not random. These aren't numbers with no meaning, with no data to back them up. Every single one of these metrics, seasonality, technicals, positioning, spreads, and macro, they have been back tested rigorously. And these scores are generated by a lot of math that is constantly occurring in the background. It's looking at thousands upon thousands of data, and it is coming to these calculations. If I head to my VS Studio Code here, I won't reveal all my code obviously because there's a lot of gems inside, but you can see that this is a whole infrastructure. I have a bunch of files here, database, scripts, like just a bunch of stuff that is essentially responsible for this clean calculation and output that you're seeing right here. And again, this has been rigorously backtested, out of sample backtest, by the way. And for example, I'll show you my macro model backtest performance here, which by the way, the macro model was the hardest to build. So this model right here, it was the most difficult, which was actually surprising to me. I actually thought that if you look at macroeconomic data, it could give you the easiest, most straightforward edge. But that was not the case. It took me easily between 100 hours to build this model right here. So the backtest performance is something that I'm very proud of. So you can see that Euro USD, this is a 10-year backtest from 2015. It simply looks at the momentum of the macro score over time and buy whenever there's strong momentum and sell whenever there's weak momentum. And this is not really a buy and sell model. It's something, the model overall, it acts as a guide. So it's not like a trading bot where this would be my actual returns. This is just showing that the macro model has an edge and it's not random. So you can see that the returns for a 5-day hold. So if you buy when there's strong momentum in the macro model, the return since 2015 was 24%. Again, it's not impressive, but that's not what's important for the use case of this model. It's the win rate that's important. And you can see that the win rate is constantly above 50%. And even here you have a 58% win rate. So this is what's important. It tells you that whenever there's strong momentum in the macro model, does the euro tend to go up more than it goes down, and the win rate tells you that. And then the opposite, whenever the momentum of the macro model is weak, does Euro USD tend to go down or up? And this win rate reflects that. So that's what's important. I want to know if the macro model is right more than it's wrong, and it is. So for Euro USD, the stats look great. For GBP USD, you can see it's absolutely phenomenal. The win rate here is 60%, 63%, 76%. For AUD USD, you can see it has a constant above 50% win rate as well. USD CAD, it's similar. So the macro model, I want you guys to understand that these aren't random. These scores are not generated randomly. They aren't intuition, like, oh, I believe this is what macro should be, this is what macro should measure, or I believe this is what technical should measure. Every single one of these metrics have been rigorously back tested to ensure that they have an edge and they actually provide value. So I just wanted to make that clear here, and that's essentially what the model does, and then it aggregates everything. So now that we have spoken about what the model does and you get an idea of it, we can actually go through the software that I'm currently working on the user interface. Now it's not completed yet. I'll be making an update in the future. I should probably make a playlist with this so you guys can actually, just head to the playlist if you care about my software and the progress and so on. I may do that. So let's go through the features of the software. So this is the main page that we're looking at, which is the FX signal page. This is the page that you probably use the most. All it does all the math and calculation, and then it gives you a reading on the currency crosses that you want of bullish or bearish. So a final score greater than, which is 60 or more, is bullish, and a final score which is 40 or less is bearish. So you can see that at the moment Euro AUD is currently the most bullish with a final score of 64, and AUD JPY is the most bearish with a final score of 39. And by the way, I have CAD and Swiss franc here, which I can add, but I don't trade these, so this is why I did not add them. But when I add them, you can see that now CAD JPY and Swiss franc JPY is the most bearish. So I don't trade CAD, but when this is released to the public, you can simply just pick what currencies you want to choose. So if you don't trade, say, the Japanese yen or euro, you can only look at AUD, GBP, and USD right here. So that's a cool feature that I added right there. So that's the main table, the main FX signal table that gives you the absolute level of a score. But what's even more important in trading than the absolute level is the delta, which is the change in the score. So euro is at 63. The final score is 63, which is good. Okay, that's a bullish reading, but is it a situation where the score is 63 and 1 or 2 weeks ago it was 40? Then that would be good, because it shows that the momentum is going up. Things are looking good for the euro. But if we look at the delta page here, what this simply shows is, I'll probably zoom in on this again. What this shows is the change of the metrics over time. So this blue line right here is macro, and you can see that macro, wait, this is not the euro, sorry. This is the euro. So you can see that macro on August 15, macro for the euro was at 100, and today it's at 68. So this is not good. So even though a macro reading of 68 is bullish, the momentum is going down. It is getting less bullish essentially, right? And I kind of changed it, so there's a lot of issues here. But like the spread, you can see that spread was at 93, and now spread has fell to 64. So again, this is not good, and the technicals have been choppy. So even though euro, looking at the table, you can see euro is giving a score of 63, and it is obviously bullish. If you look at the delta, the euro has been going down, and we can remove all of this and just look at the final score. And this is the final score. So this is this right here, the final score, but the change in it. And you can see that on August 15, the final score was 82. And on today, September 3, the final score is 63. So the score for euro is going down. So this is not a bullish sign, even though euro is bullish in my system. If you look at something for like the Australian dollar, I think this is showing the complete opposite story. So well, not really. So on August 15, the Australian dollar was giving a reading of 33. And on September 3, it's giving a reading of 35. So it's mostly been sideways, but you get the idea of this page. What it shows is the delta. It shows you the change in the different metrics. So the change in technicals, the change in macro, the change in spread, the change in positioning. And if these are going up, that's good for a currency. If it's going down, that's usually not so good sign for the currency, right? So this is the delta page, and in my opinion, it's more important than the tables page right here. So it's important to look at the change in the score rather than the absolute score. So that's really the FX signal page. You have the table and you have the delta right there. Next we have the currency analysis page, which is currently under construction. So as mentioned, this isn't complete as yet, but the currency analysis page will essentially be like a more in-depth analysis of the FX signals page. So you can see here is the general. Actually, I show you the UI design that I made for this. So this right here, this is the actual UI design. So when I launch the website, this is what the design will actually look like. So it will have an overview and it will have this nice container right here showing you the USD score, and it will rank macro, seasonality, positioning, technicals and spreads, just like on the FX signals page, but in a a more aesthetically pleasing container. And then here you can see the current bias, which is 70. This is just the UI design, the previous day bias, previous week and previous month, and then you can see the historical score of USD. So this is what the final design should look like. As mentioned, this page is not complete yet, it's just under construction. So you can see it's the same thing as this. So it has currency analysis, it has the different currencies that you can choose. We are currently on United States. You can change to euro. You can see that it will show the euro score, and then you can go to macro, and this will show the macro page where you can see the economic data here, which we'll get into soon. Then we have the positioning page, which will show this positioning, spreads and seasonality. So you get the general idea of this right here. So this is the currency analysis page. It's currently under construction, and it should look something like this, the final version, but the idea of this page should be this right here. So that's currency analysis. Next we have economic data, and this is very straightforward. It just shows you the economic data from each country. So you can see that some of the color here, I'll zoom in on this again, some of the colors here are yellow. So when it's when the color is yellow, that means that this is a data that was released this month. If it's white, it means it was the previous month or the month before that. More important data should get more weight than older data. So you can see that we're looking at the United States, and the most recent data was ISM manufacturing PMI, and it was a miss. So this should get more attention than something like, for example, ISM services PMI, which was last released over a month ago. So this is the economic data page right here, and you can look at this for every single country. So you can look at Eurozone, you can see that we had unemployment rate, CPI year over year out of Germany, GDP. You can look at Japan, you can look at the United Kingdom, Australia, Canada, and it essentially has all of the economic data here that you would want to look at and just analyze as a trader to see how an economy is performing. So this is the economic data page right here. Next we have positioning, which is a page that you'll probably look at once a week or when the CFTC data gets released. So the positioning page, we look at asset managers. And if you know about the CFT and institutional positioning from the COT data, you know that you have asset managers, leverage funds, and non-commercials. And if you know that, you're saying, why am I using asset managers? Why don't I use non-commercials? And my friend, it all comes down to what the backtest showed us. So these models are not random, and I cannot stress that enough. These models simply follow the data. Whatever the data says is best, this is what these models use. So non-commercials, I run a backtest, and the backtest on non-commercial, their positioning, it's okay, but it's not that good. Asset managers, a lot of times they are actually leaders to reversals. So the US dollar right here, you can see that they basically started unwinding on January 14. And if you look at the USD chart, I don't even have to open it. You will see that on January 14, that was the exact time that the dollar created a high and started going down. And this was the exact time asset managers started to unwind. So this is just a visual test, but I run an actual back test to show the result and the performance. And asset managers are the best to use to understand what positioning is like in the market. So this page right here, you can select the different currencies. So you have Euro, JP, the Great British Pound, Japanese yen, AUD, and all the currencies essentially. And then you have your table right here, and you can use different look back. So if you want to look at the previous 6 months, you can see how they have been positioning on USD for the past 6 months. You can look at 2 years, you can look at 3 years, and so forth. And you can do this for every currency. So if you want to look at how asset managers have been positioning on GBP for the past 3 years, you can see this here. But I like to use 2 year because it's much cleaner and it gives you a better picture. And then down here, what we have is, you can see we have positioning percentile. And what this shows is essentially how bullish or bearish asset managers are in the past 5 year, as you can see, a 5 year basis. I'll zoom in again, how bullish or bearish they are on a 5 year basis and a 10 year basis. And if you don't understand what percentile mean, it's just a statistical term to see how bullish or bearish someone is. So if the percentile is low, just think of it as being very bearish. So this ranges from 0 to 100. If they're in the 16 percentile, this essentially means that they are very bearish. 14 percentile, very bearish. If we look at the US dollar, for example, currently in the past 5 years, the model is telling us that in the past 5 years, asset managers have only been more bearish on the US dollar about 2% of the time. So they are extremely bearish at the moment. This is what the percentile is telling us, that they are extremely bearish. If we look at something like the euro, on the other hand, institutional money is extremely bullish on the euro. They're in the 85th percentile on a 5 year basis and the 92nd percentile on a 10 year basis. So this is just a nice statistics to really see how institutions are positioned on particular currencies, because these guys, asset managers, they are usually on the right side on markets. So whatever side of the markets they are on, you essentially want to be on that side of the market too. And then here we have just the latest change. So you can see that this was last updated on August 26th, and the net change for euro, we're looking at euro now, was plus 5,500. So they essentially added longs. As you can see, they added 5,200 longs and removed 374 shorts. So institutional money is still very bullish on the euro, and you can do this for essentially all currencies. So we can look here and you can see that on dollar they were essentially flat. They added longs and added shorts, but it was a net short overall. You can look at JPY, they added longs and removed shorts. So you can just come here and do a bit of analysis, and all of this right here is essentially calculated in the positioning model. And I don't know if I mentioned in the start of the video, but I'm actually planning on making a slight adjustment on the positioning model, because the positioning model is more, currently it's more showing a longer term performance. So if you're a long-term trader, this positioning model is very valuable. But as mentioned, I'm a short to medium term trader, so I need to change this positioning model a bit so it can better reflect my trading style. So this is what this positioning score essentially reflects. It shows how bullish or bearish institutions are on a particular currency and their momentum. So a score of 100 means that they are extremely bullish on the Japanese yen, extremely bullish on the euro, and they're extremely bearish on the USD and extremely bearish on the Australian dollar. So that's essentially what the positioning page reflects, but you can just come here to view the analysis yourself. And next we have the spreads page, which I haven't started building it, but this will simply just show the momentum of spreads over time. And spreads is something that is very important, that I realized that banks, every single bank, JP Morgan, Goldman Sachs, UBS, every single one of them, they focus a lot on spreads. So US 2-year yields, German bonds, UK 2-year yields, and all of that stuff, they focus a lot on that stuff. So this is why I added spreads into the model, and this page will just simply display the momentum of the spread, so you can see how spreads have been performing in each currency. And then risk sentiment, again, I have not built this page yet, but we'll just show risk sentiment gauge that looks at different risk indicators of the markets and tell if the markets are in a risk on or risk off, because as you know, risk plays a huge part in the markets. So this will be the risk sentiment page, and I'll have a fair value model. And this fair value model is not some ICT concept that looks at when price makes a gap and then say, hey, there's a fair value. No, a currency's value is largely determined by these 5 factors: seasonality, technicals, positioning, spread, and macro. So if these are signaling that a currency should be bullish, right? These are factors that have been driving currencies since fiat currencies existed. So if these are saying that a currency should be bullish, but it's actually bearish, this means that a currency is undervalued, and this fair value model will reflect this. So if the system is giving a bearish reading, but a currency is going up, the fair value model will reflect that this currency is currently overvalued at the moment. So that is essentially what this model will do. And then we'll have seasonality, which will show a bit of seasonality. So it will show the seasonality for the different currencies and so on and so forth. And then these are just admin stuff. These are not for users. These are for my use case. And yeah, that's about it. That's my forex trading system that I've been working on for 7 months. I can't believe it's 7 months. That's a very long time, but I'm definitely proud of the results. And if you guys are saying, hey, this looks cool, I want to try it out, first I have to use this for about 4 to 5 months, because I have to see if this actually has an edge in the market, if the signals are great. Yes, the backtest results are great, but we want to see how it performs in the live markets. I would not want to release a software where I have no trading history or trading performance to prove that this is valuable. So you guys can really just stay tuned. In the next, as I said, 4 to 5 months, I'll release this to the public, because I have to use it at first myself to see if it's valuable, if it's accurate, and see the live trading performance before I release it. So just stay tuned and be here for the release. It will be free, by the way. So I currently have to spend money on this. I have to spend money for APIs and so on, so it's not completely free of cost. You know, I have to spend money to make this software. So in the future, this will more than likely be a free software, but I want to release it for free so I can get feedback and so forth. But yeah, that's about it. This is just another update on my forex trading model. Peace and trade safe.